comes the money.
Here we go. Money talk.
Here comes the money.
What's going on, YouTube? It's your boy Stock Brother bringing you those bangers. On this channel, we review hot stocks and are always looking for those hidden gems. If you haven't already, subscribe to the channel and smash that like button. Join the family by subscribing to the Patreon so we all can get that paper together. Make sure to watch the whole video so you don't miss out on all the important information I'm bringing to you. Today, we're discussing the best 2 stocks for 2022. Now, before we get started, we're going to take care of some business, then get right into it. If you're new to the channel, this channel is about investing in stocks, making that money, and of course, making more money. So before we get started, subscribe to the channel, hit that notification bell so you don't miss out on all the hot new videos, and smash that like button. Don't forget to share the video with your friends and family so we can all get that paper together. Subscribe to the Patreon to join the family, and as a bonus, you get real-time alerts of when I buy and sell my stocks. It's an easy way to follow along and get that paper, baby. The first stock on the list is AMC Entertainment, ticker symbol AMC. Now this stock closed at $27.20 and it was down over 6% for the day. The stock had a loss of $1.74. The critics are still saying AMC is dead, but you know what I say? Haters are gonna hate. Alright? Haters are gonna hate. You got the critics and you have the shorts. What they're really trying to do is demoralize the apes into selling their shares. They want to buy your shares for cheap, and the shorts want to keep putting that pressure on the share price to bring it down further. But you know what? The apes ain't falling for it, man. We ain't falling for it. By the way, big shout out to Trey's Trades. My boy ain't never give up on AMC, and I respect him for that. He's the #1 ape when it comes to AMC, so give that boy a follow. For AMC, there's a light at the end of the tunnel, and I'm gonna go into why I'm bullish on AMC for 2022. According to an article that came out on Yahoo Finance, the studios are abandoning the hybrid streaming model. In 2021, the movie industry deployed multiple experiments to combat the pandemic, primarily through hybrid streaming releases. But it looks like 2022 will be the year of back to basics for studios, even as the Omicron variant rears its head. The article continues by stating that Black Widow proved to be 2021's most successful hybrid release after the film earned over $80 million in its domestic box office debut. Disney boasted that it notched an additional $60 million via Disney Plus Premier Access in its first weekend on the platform. The article continues by stating that still, the media giant eventually reverted back to a theatrical first strategy in September after the success of Shang-Chi and the Legend of the Ten Rings. The Marvel film delivered impressive results that surpassed box office estimates over the Labor Day weekend holiday, earning just over $75 million in its domestic debut. Sean Robbins, the chief analyst of Box Office Pro, stated that we're seeing the shift back to a strategy of theatrical first for most studios in 2022. The article continues by stating that alternatively, Spider-Man No Way Home, which crushed box office estimates and delivered the strongest opening weekend numbers of 2021, underscored the importance of a younger audience. So far, the Sony Marvel production has amassed over $500 million in domestic sales, with some analysts predicting a final domestic haul of $750 million. According to Sony, the vast majority of the film's moviegoers were under the age of 34. Robbins added that that's going to be the driver of business, especially during the pandemic. Theaters and studios are really relying on that crowd showing up, and they've shown an eagerness to do so with movies like Spider-Man. I was reading this article in Barron's about AMC, and I saw this quote by the CEO, Adam Aarons, that really cracked me up. He said that the self-absorbed, all-knowing, so often wrong conventional wisdom that streaming will defeat theaters just does not know how to process the news. Hey, prophets of doom, choke on that. Man, I was cracking up when I read that. That boy is a beast. That's why he's a silverback, bro. He was essentially saying, F the haters. You know what I'm saying? F the haters. Man, what I'm waiting for is Mo Ass 2022, baby. That's what I'm waiting for. If you feel the same way, smash that like button, baby. Smash that like button. Mo Ass 2022. Let's go. The next stock on the list is NIO, ticker symbol NIO. This stock closed at $31.68, and it was down over 2% for the day. They had a loss of 74 cents. On the positive side, the stock was up over 4% during the 5-day week. There was no news or SEC filings that came out that week that caused the pop. This is another stock that's been getting a lot of hate. For 2022, NIO has a lot of positive catalysts coming up. According to an article in Forbes, NIO stock is 55% undervalued. The article states, if it weren't for the uncertainty about whether the Chinese government will pressure it to delist its shares from the New York Stock Exchange, NIO might be trading at a higher price. The article states that Wall Street's average price target is about $62 and that the stock is 55% undervalued. The three reasons being the large market, the increasingly strong market position, and the excellent products and expanding footprint. The article continues by stating that NIO's revenues are soaring and its vehicle margins are improving. According to Zacks Equity Research, NIO's third quarter revenues rose 116% to over 1.5 million as its vehicle deliveries increased 100% to over 24,000 vehicles. Its vehicle margin improved from 14.5% to 18% due to higher delivery volumes and an increase in average selling price and lower material costs. For 2022, analysts expect NIO's revenues to grow over 74%. More specifically, analysts surveyed by Seeking Alpha have an average forecast of over $9.83 billion in 2022 revenue. That's 74.3% over the 2021 revenue estimates of $5.64 billion. According to the Motley Fool, NIO has a lot lined up for 2022. They have the delivery of its flagship sedan, the ET7, beginning in March, delivering the mid-size ET5 sedan, its Tesla Model 3 competitor, in September, and entry into at least 3 new European countries. In between, NIO is reportedly in talks for a partnership with China's largest seller of new energy vehicles, BYD. The article states by January 20th, investors should know the number of ET7 orders NIO has secured. Between January of 2021 and November of 2021, it delivered over 80,000 units across its 3 SUVs, up 120% year over year. While the ET7 looks promising, the ET5 could be a game changer, and if NIO enters the US market in between as rumored, or goes for a dual listing in Hong Kong, the sky could be the limit for its shares. So let's go, baby. According to TipRanks, NIO is listed as a strong buy, with 8 analysts covering it, 7 with a buy and 1 with a hold. The average price target is $61.86, which represents a 95% upside. The highest price target was $87. This stock has tremendous upside, and for 2022, you need to keep your eye on it. That's all I have for today. Comment down below and let me know your thoughts on the stocks we discussed. Don't forget to subscribe to the channel and help your boy out by smashing that like button. It helps my channel out with the YouTube algorithm. So until next time, let's get that paper.